Going into 2023, it seemed like all the stock market analysts were telling us that it was going to be a bad year, with the Fed keeping interest rates high and quantitative tightening happening across the board. However, we're just a couple weeks into the new year and the market is already up, with the S&P 500 up over 4%. What gives? As long-term investors, it's really important for us to be somewhat nimble. Now, you shouldn't be a day trader. You shouldn't be buying and selling every single day. But over the last couple of weeks, I've been taking profits. So I wanted to give you my outlook on what I see for 2023 and what I've been doing. In this episode, we're going to take a look at 3 of my holdings. Nike, one of my oldest holdings, Dow Chemical, which I've held for 5 years, and SoFi Technologies, which I only just opened in November of last year. If you watched my market outlook video from a few weeks ago, you'll know that I am actually bearish about the stock market. And despite the fact that we've seen really good positive results over the past few weeks, I still remain bearish. I've been in the markets for 25 years, and a bear market is always a strange beast. Back in 2008 and 2009 of the Great Financial Crisis, 2008 actually finished as an up year before 2009 saw the real lows that weren't hit in 2008. And the same thing happened with the dot-com bust in the early 2000s. Even though the market had really sold off in 2001, the bottom didn't come until 2002. Whether or not we're going to see a lower low than what we saw in 2022 in this bear market, I do believe that we will at least get close to testing last year's lows. I never short the markets. I never short any position. I have a hard time with it. If you watch my options trading video, you'll see why. If you're right about the direction and the distance, but wrong about time, you'll still lose everything. As a long-term investor, the way that I show my bearish perspective is by taking profits when I have them to take. I only sell small amounts at a time, but I have to take profits when I have them. Otherwise, the market will take them from me. And since I'm long in all of the positions I'm taking profits in, it's obvious that I think it's going to go higher in the long term. But that doesn't matter. My discipline has to trump my conviction. Let's start by looking at Nike. I opened Nike on February 14th of 2012 at $26.71, and I've taken significant profits out of it over the years. On Monday, Nike hit my next sell target, which was $126.46. And this only took 12.12% in gains on shares that I had bought on May 6th of last year at $112.79. But as you can see, Nike's rallied quite a bit off of its 2022 low. In fact, it's 56.71% off its low as of this past Friday. That's a substantial rally, and I have to take profits in Nike so that I can replace the shares at lower levels if Nike sells off. Right now, my cost basis in Nike is negative $10.55 a share. A negative cost basis means that I've taken all the original investing capital out of Nike in addition to $10.55 per share of those that I hold into my portfolio right now. From here, my next sell target is around $150, where Nike will have exceeded the target allocation size for my portfolio, and I will need to reduce it. My next buy target is down here at $85.07, and you can see that's slightly above the low that Nike hit a few months ago. I actually had someone on Twitter ask me, do I really think Nike can go that low? Well, yeah, of course I do. It was just that low a couple of months ago. Does that mean that's my price prediction? No, I'm a long-term investor in Nike. I don't make price predictions. What I do is I plan for both directions. What am I going to do if Nike goes up? And what am I going to do if Nike goes down? Next, let's take a look at Dow, what used to be called Dow Chemical, and then they just dropped the chemical entirely. I opened this position on May 3rd of 2019 at $52.78 a share. And as you can see in my allocation chart, Dow is not the biggest position in my portfolio. That being said, it actually has more capital in it than any other position in my investments in play portfolio. Because of this, I've decided that it's time to start taking profits in Dow. As you can see in this weekly chart, Dow has crossed over $70 twice, its all-time high. And since its most recent all-time high, it actually dropped 40.29%. And I rode it all the way down. Instead of taking profits the second time it was at its all-time high and reducing my position size, I just rode it all the way down. I won't make that mistake again. if Dow gets close to $70, although I am trimming profits on the way up in small quantities, I will remove all of my capital near its all-time high. This week, I actually sold Dow twice. Once on Monday at $55.83, and then on Thursday at $58.53, which gave me an average selling price of $57.18. My current cost basis is $30.90 a share, quite a substantial reduction from where I started at $52.78, but I still want to reduce that cost basis significantly. My next sell target is at $61.08, a bit higher than here and lower than the next point of resistance. And my next buy target is $44.72, and you can see that's quite a bit off of Dow's lows, but I have no problem replacing the shares that I'm selling because Dow also has a substantial dividend. Even at its current levels, it pays more than 5% annually. My last move from the last week is SoFi Technologies with the ticker symbol SOFI. This is one of the newest positions in my investments in play portfolio. I only opened it on November 22nd of 2022 at $4.80 when it tested its then all-time low. SoFi ended up going lower than that, getting to a bottom at $4.24, and I added some more shares at $4.28. Even though when you look at the chart, you can see that SoFi had a really significant all-time high near $30, I'm still planning on taking profits at these lower levels. On Friday, SoFi hit my next sell target at $5.42, and this locked in 26.64% in gains on shares that I only bought a couple weeks ago on the 28th of December for $4.28. This gives me my current status with a cost basis of $4.65, and from here, my next sell target is $8.31. Lower than the next point of resistance. Since I was able to sell some of the shares I bought at a lower level, I will replace those shares if SoFi decides to test its low. And of course, I have a lot of allocation on the side in case SoFi decides to go lower. You can follow the moves I make in these positions and the rest of my positions in my investments in play portfolio, my speculation in play portfolio, and my pandemic portfolio all for free from my website at getirk.com. Thank you for watching. Please hit like and subscribe, and I'll see you in the next video.